8/24, 2012 it is. We all know that. But it's the 14th day. How about that? 12/14. How about that? Now, one of the things that I want to highlight here, this is a call chart. It was a 505 call that was way up here at $60 a contract, $50 a contract. And when Apple goes down, they have just mutilated the call buyer. They were $40 3 days ago. And the thing about it is, we're going to buy them because they were $24.95. The high was $13.85. They're making lows. That strike price, he got right close to it. So we're going to have limit orders out here to buy this one at $3.60. If he can come down and give us, we have 351 lows. So every pop has been a sell on Apple Computer. And it's a 505 call. Not only that, this is a put chart. And I am king master at buying wholesale. Meaning that everybody that's in this 505 call that owned them, look, they're dead. They are so underwater that it's unbelievable. But why is it that StockMarketFunding.com, with its market maker team of people that trade in the pit here, that we are buying down here where we have very little risk? We have very little risk for an intraday options on Apple to buy and then exit. As a market maker, I have very little risk down here at 555, but we have lower bids at 360. I will be king wholesaler, meaning I will be the most wholesale on the intraday level than anyone else out here. Why? Because I let all the risk, I let all the selling come down. It's made 351 lows. And this is that call option right here that's slightly in the money that will expire today. And once again, folks, it's about teaching you how to take this intraday profits and take this money. And once again, we are masters in high frequency options trading. And why? Because we have a mathematical system that puts us wholesale, while the rest of the public and investing community is just getting mutilated in these calls. And I get to buy them cheaper and sell them for $1 profit or $2 profit. That's how you get out of the way. But look at the put side go. The 550 puts are working real good. And they expire today. And we have these. But now we're going to trade the 505 call. And this is, once again, 2 hours in the opening bell. And we have a bottom right here. And we had 3,200 contracts traded. And we'll be selling them now with our other bigger traders that have 50 of these contracts here. We'll sell for the profit right now. And then we'll buy back lower because it's made lower lows all day. So you got to know when to get wholesale. But the most important thing is, how do I exit? How do I exit? There's 20 out. There's 30 out. I got a whole bunch of them I'm selling up here at the highs. And the speaker over there on that one line, make sure you're coming out up there, all of them now. All right. So this way here, okay, we get all the exits out of here now. All right. Okay. So there's 20, 30, there's 50. We could probably another 50 contracts to sell in here, and that's with lots of people, not just one person now. They're selling out. They're taking their profits. And they're going to go home with money on the 505 call. Intraday, they expire today. So, once again, you can see the volume where I'm having people sell out here. Okay, all these contracts here. And one thing about having a seat here at SMF in the option pit, you're going to walk away with big money because you're going to be getting orders like that. Then you're going to be exiting like that. And that's the bottom line. So, once again, it was all about what? It was all about removing the capital dollar risk and getting wholesale. And that's the end of the story. Enjoy those profits to our senior MMTs.